Hey everyone, and welcome back to the Deep Dive.
Great to be here.
This is where we try to make sense of all the market noise, break down the data, and give you the insights you need to really understand what's happening with stocks and trends.
Yeah, cutting through the clutter, basically.
Exactly. Now, quick reminder before we jump in, everything we talk about today is just for informational purposes.
That's right. We're not financial advisors.
So please, always do your own research, your own homework before making any investment decisions. Cool.
Absolutely. Due diligence is key.
Okay, let's dive in. Market snapshot first. The S&P 500.
Right, the SPY. It closed at $5,958.38. That was up 0.70% for the day.
And that's 5 days in a row of gains, right?
Yeah.
Getting up there.
Yeah, fifth straight day. It's definitely pushing. And the NASDAQ 100, the QQQ.
Also positive, closed at $521, up 0.44%.
So both moving higher. With the S&P, it's really interesting. Like you said, it's climbing, and it's getting near that $6,000 mark.
That's a big psychological level, isn't it?
Right.
Resistance. Exactly. Think of it as a potential ceiling. Historically, you might see sellers step in around there, so definitely one to watch closely.
And if it does pull back a bit, we've got support around $5,660.
Yeah, around there. And there's also that, that open gap on the chart near 5,660. Sometimes price gets drawn back to those areas.
Right, they can act like potential floors.
Precisely. Now, the NASDAQ 100, the QQQ, it's a slightly different picture. It actually managed to close above its resistance at $520.
Okay, so punching through that ceiling. Bullish sign.
It can be, yeah. Suggests strong momentum. Closing above resistance often indicates buyers are pretty determined right now.
So the next hurdle for the NASDAQ might be around $530 then.
Looks like it, yeah. And similar to the S&P, there's also an open gap below, down near $490. That could potentially act as support if we see a dip.
But the big question for you listening is, how strong are these moves really?
Right. It's crucial to look beyond just the price. You need to monitor the trading volume. Are lots of shares changing hands on these up days?
And those momentum indicators we talk about.
Exactly. Things like RSI, MCD, they help you gauge let's say, the conviction behind the rally. Is the buying pressure really building?
Okay, let's shift to the big headlines. What's been driving things? That U.S.-China trade news seems pretty significant.
Oh, definitely. The announcement of that 90-day pause on new tariffs, that was a big relief for investors.
You could almost feel the market breathe a sigh of relief, couldn't you?
Yeah, it took some of that trade tension worry off the table, at least for now.
Yeah.
And it seems to have really boosted sentiment.
Absolutely. The S&P 500, it's actually wiped out all its losses for 2025 now. It's positive for the year.
Quite a turnaround.
And the VIX, the fear gauge, still below 20.
Which generally points to lower expected volatility, maybe growing confidence among investors. It's interesting how quickly that sentiment shifted.
It really is. On the economic data front, we got April retail sales rose 0.1%, right?
Yeah, pretty much spot on with expectations. It's definitely a slowdown from the 1.7% jump we saw in March.
So maybe consumers are tapping the brakes a little, but still spending?
Seems that way. Steady, not spectacular. It suggests consumer spending is holding up, but maybe not accelerating wildly. Something to keep watching.
Okay, specific stocks making news. Tesla, TSLA.
Yeah, Tesla had a good day, up 2.1%, closed near $350, $349.98 to be exact.
And they added someone new to the board.
They did. The former CFO of Chipotle.
Interesting move. Bringing in that financial background.
Yeah, it could signal, a focus on strengthening their financial leadership, maybe tightening up operations. Makes you wonder what the strategic thinking is there.
Yeah, and the other big one, Taiwan Semiconductor, TSM.
Huge news from them. They announced plans to invest up to $42 billion. Massive number.
Wow. What's that for? Expansion?
Exactly. Expanding production capacity. They're talking about building 9 new facilities.
That just speaks volumes about demand, right?
Yeah.
Especially for AI chips.
Absolutely. It highlights the incredible global demand for semiconductors, these foundational components for, well, almost everything tech, but particularly AI right now. Big implications.
Okay, let's dig a bit deeper into those two stocks then. Tesla first. Closed at $349.98, up 2.1%. What are the key levels we're watching?
Well, you've got resistance, that potential ceiling, up around $360. And support, the potential floor, seems to be around $306.
And technically, it's looking pretty constructive, right? Trading above its 150-day moving average.
Yeah, that's generally seen as a positive trend indicator. And like you said, it's bumping up against that $360 resistance.
So a clean break above $360 could mean more upside.
Potentially, yes. That would be a strong signal. But on the flip side,
There's that open gap we mentioned earlier, down near $306.
exactly. If it does pull back, that's a logical area where buyers might step in for support.
What about other indicators? RSI, MACD.
Good question. The RSI, the Relative Strength Index, it's getting up there, approaching what technical analysts call overbought territory.
Meaning it might have gone up too fast, too soon, due for a pause?
Possibly. It suggests maybe some short-term consolidation or a slight pullback could be on the cards.
Or
However,
the MACD is showing something different.
the MEC, yeah, it's actually showing a bullish crossover. That tends to reinforce the positive momentum we've seen. So a bit of a mixed signal there.
Okay, so for Tesla traders, it's watch that $360 level. Breakout continues the bull case. Failure might mean consolidation or a test of 306 cents.
It sums it up pretty well. Now let's look at TSM, Taiwan Semiconductor.
Right. Closed basically flat at $194.22. Resistance is right there around $194.
Yeah, it's been kind of stuck just below that $194 level. Consolidating, trading sideways for a bit. Support looks to be down around $180.
So if it can break out above $194, that could be significant, especially with their big investment news.
Definitely. A decisive move above $194 could signal renewed buying interest and potentially lead to further gains.
And again, there's an open gap below around $180 acting as potential support if things go south.
Correct. Similar setup to Tesla in that regard.
How do the indicators look for TSM?
A bit different here. The RSI is pretty neutral, not really indicating overbought or oversold. And the MACD is flat too.
So not much momentum either way right now. It's just waiting.
Seems like it. Yeah.
Yeah.
It feels like it's poised for a move, but the indicators aren't giving a strong directional signal just yet.
Okay, so for TSM, a break above $194 is the bullish trigger. Otherwise, a drift back towards $180 is possible if it can't break out.
Exactly. Waiting for that catalyst, that decisive move.
All right, let's look ahead. What's on the radar for next week? Economic calendar, market movers.
Big focus will be on the Federal Reserve. Any statements from Fed officials will be dissected word by word.
Especially regarding interest rates, right, given the inflation picture.
Absolutely. The market's hanging on any clues about future policy. Could definitely stir things up.
And we've got key inflation reports coming too, CPI and PPI.
Yep. Consumer Price Index and Producer Price Index. Those will give us the latest read on inflation from both the consumer and producer side. Very important data points next week.
Yeah, those could really set the tone. What about earnings?
Couple of big ones, especially in tech. NVIDIA, NVDA, and Broadcom, AVGO.
Ah, NVIDIA. Everyone wants to see if that AI boom is still powering them forward.
For sure. Their results are a bellwether for the whole AI space. And Broadcom gives us another important look into the semiconductor sector's health.
So a heads up for everyone listening, keep a really close eye on that semiconductor sector overall.
Good point. With TSMC's investment news and these major earnings coming up.
Could see some increased volatility, maybe some trading opportunities there.
Very possibly. It's a sector that's front and center right now.
Quick look at sectors before we move on. Tech was strong recently.
Yeah, technology led the way. You saw NVIDIA up 3.5%, Apple up 2.8%. Fits the narrative we've been discussing.
And on the weaker side, healthcare.
Healthcare lagged a bit. Pfizer down 1.2%. Johnson & Johnson down about 0.9%. Typical sector rotation, really.
Okay, now let's shift gears slightly. We've seen this rally, but there are some more cautious voices out there. Katie Stockton, for example.
Right, Katie Stockton from Fairlead Strategies. She's a well-respected technical analyst, and she was on CNBC recently with a, let's say, more tempered view.
Yeah, it's an interesting contrast to the recent positive price action. She talked about the possibility of retesting the April lows.
She did. Despite the rally, she's looking at certain indicators, specifically these DeMark indicators.
Yeah, it does show.
They're tools used to spot potential trend exhaustion. And she thinks they might signal short-term upside exhaustion, maybe within the next week or so, for both the S&P and the NASDAQ 100.
So the rally might be running out of steam short term.
That's what her indicators are suggesting. And she made a really key point.
Which was?
That the very sectors leading the charge, higher think growth, think tech,
Yeah.
could be the ones that flip and lead the way down if the market does turn lower.
Ooh, that's something to consider. The leaders become the laggards.
Exactly. She even mentioned the possibility of seeing a new low relative to the April low. Not a prediction, but a possibility based on her framework.
But she also talked longer term, right? Using the monthly MACD.
Yes. That's more for gauging the big picture, the overall market cycle bull or bear.
And our take there.
Despite the short-term caution, she believes we're still in a longer term, what's called a secular bull trend.
Meaning the overall trend is still up, even if we hit bumps?
Right. Which implies that if we do get a significant pullback later this year, it might actually present a good buying opportunity once these current risks subside.
Interesting. Long-term positive, short-term cautious. What about Bitcoin? She mentioned that too.
Yeah, she noted it's been rallying alongside equities, making it act more like a risk asset, correlated with the NASDAQ 100 lately.
So less of a safe haven, more like a tech stock right now.
Seems to be how the market is treating it, yeah.
Hmm?
Her firm's view on Bitcoin is neutral long-term. They see it in a trading range, resistance near current levels.
So not actively buying, but maybe a small place for diversification.
That was her take, yeah.
Yeah.
A small allocation for diversification, but not aggressively buying at these levels.
Now, it's important to stress this is Katie Stockton's analysis based on her indicators. It's not a crystal ball.
Absolutely not. It's one interpretation of the data, a valuable one, but just one perspective.
Did she give any specific triggers she's watching that would make her reduce exposure?
She did. She mentioned the 20-day moving average, rolling over, stochastics, another momentum indicator, turning down, and the VIX starting to climb meaningfully off its lows.
Okay, specific signals to watch for potential trouble.
Right. And she also mentioned seeing exhaustion signals already appearing in most European markets.
So maybe a broader trend.
Could be. And she pointed out that support for the S&P 500 is quite a ways down, maybe 6% lower.
Which doesn't create a great risk-reward setup in her view.
Exactly. The potential downside to strong support is significant compared to the potential immediate upside, making her cautious.
And lower trading volume recently might support that caution.
Yeah, she noted the lower volume on the SPX, which can sometimes suggest a lack of strong conviction behind the rally.
Okay, and just quick definitions again. Bear market, 20% drop. Bull market, 20% rise. The NASDAQ's seen both sides of that recently.
Good reminder of the benchmarks.
We also heard from Paul Tudor Jones, another big name, also cautious.
Yeah, he talked about potentially retesting lows. He gave some specific levels for the S&P 500, watching for a break below 5,690 as an initial warning.
And 5,500 as a more serious confirmation.
Right, around 50% of the recent rise. He sees that as a more significant sign of a downturn if we get there.
And Steve Cohen, David Tepper, also expressing concerns about the economy, recession risk.
Yes, Cohen apparently put the chance of recession around 45%, so definitely some heavy hitters feeling uneasy about the macro picture.
We even saw that Bank of America survey showing investment managers are pretty negative overall, expecting slow growth.
Which, ironically, might have fueled some of this recent rally, as those negative bets had to be unwound, forcing buying.
A short squeeze dynamic, perhaps?
Could be part of it, but the underlying sentiment among many managers seems cautious.
Yeah, even Steve Cohen, owner of the Mets, billionaire investor, he's worried about the economy, so definitely mixed signals out there.
It really highlights the uncertainty. Strong rally, but underlying concerns and cautious technical readings from some corners.
Okay, let's try to wrap this up. Quick summary of our deep dive today. We hit the market action, S&P near resistance, NASDAQ breaking through.
Covered the key headlines. The U.S.-China tariff pause, retail sales, and those big moves from Tesla and TSMC.
We zoomed in on Tesla and TSMC, looking at their charts, key levels, and what the indicators are suggesting.
And looked ahead to next week, all eyes on the Fed and those crucial CPI and PPI inflation reports, plus earnings from NVIDIA and Broadcom.
And importantly, we contrasted the current bullish momentum with that more cautious analysis from Katie Stockton and the concerns from investors like Jones and Cohen.
Yeah, presenting both sides of the coin, the bull case, and the potential risks.
All right. If you found this deep dive helpful, if it gave you some good insights, do us a solid and hit that like button.
Yeah, it really helps the channel, helps others find this analysis.
And if you're not subscribed yet, please hit that subscribe button and ring the notification bell so you don't miss our next deep dive.
We appreciate you tuning in.
And hey, we want to know what you want us to cover. Drop a comment below. Tell us which stock you'd like us to analyze next time. We do read those suggestions.
Absolutely. Your input helps shape the show.
Okay, that's it for this session. Until next time, stay sharp. Remember to do your own research.
And trade smart.